Hello dear learners. In this video, I am going to discuss measurement of national income. As you know, there are three methods of measuring national income: expenditure method, income method, and value added method. In this video, I am going to discuss value added method. If you find it useful, please like it, and if you have not subscribed my channel yet, please subscribe it. So let us start with the topic measurement of national income. As I said, there are three methods of measuring national income: value added method, income method, and expenditure method. So let us take the first method, that is value added method. Value added method is also known as product method, inventory method, net output method, industrial origin method, or commodity service method. It is known by these names. So what is this value added method? This method measures the value addition in each stage of production, or in every stage of production process the value addition is measured. And you know that every individual enterprise adds certain value to the products, and whatever it purchases from other firm, that is known as intermediate consumption or intermediate goods. When value added by each and every individual firm is added together, summed up, we get value of national income. So national income is nothing but addition of value addition by each and every enterprise. So how it is calculated? Value of output minus intermediate consumption, you will get total value addition. So let us understand this with the help of this simple traditional example. Here we have four producing unit: farmer, miller, baker, and retailer. In the second column you can see wheat is produced by farmer, and here one thing is assumed, as there is no intermediate consumption by the farmer. So, and farmer is producing 50 quintal wheat and is selling at the rate of 2000 per quintal. So total value of output, price multiplied by quantity, so 2000 multiplied by 50, 1 lakh rupees. So farmer is producing output wheat worth 1 lakh rupees, and here value addition is also 1 lakh, as value of intermediate consumption is nil in this stage. So second is miller. Miller converts wheat into flour, and this flour, for converting wheat or atta from wheat, miller buys wheat from farmer worth 1 lakh rupees, and he converts into flour and sells it at the rate of 3400, and the value of the quantity of output is 50 quintal. This is also an assumption, as you convert wheat into flour, it loses weight, but here we have assumed that there is no reduction of weight. So total value of output in this stage will be 1,70,000. So 1,70,000 minus 1,70,000 is the value addition in the second stage. Third producing unit is baker. Baker is converting flour into bread. So he bought flour from the miller worth 1,70,000 and is producing bread. Quantity is 50 quintal again, and the rate is 4,300. So if you multiply this, you will get 2,15,000. So value of output is 2,15,000 minus value of intermediate consumption, value addition by 45,000 rupees. Similarly, retailer is selling bread to the final consumer, and for him the intermediate consumption or intermediate input is 2,15,000. He is adding some value, and the value addition here you can see 2,500, and value of output 2,17,500. So this minus this, you will get this value. So this way you can see, you can add up all these value. Total value of output is 7,02,500. Total value of intermediate consumption in these four stages 4,85,000. So difference is 2,17,500. So you can add this also, you will get this value. So if you take this as value addition, this you will be mistaken. You must deduct these intermediate consumption, because if you don't deduct it, there will be double, and you will be making mistake of double counting. So we need to deduct value of intermediate consumption from the value of output at each stage of value addition, right? I hope that you have understood this concept. Let us move on to the steps of value added method, how you can calculate. So the steps are: number one, first of all, you need to identify and classify production units. We know that there are three sectors in the economy: primary sector, secondary sector, and tertiary sector. So you need to find out subsector in these three major sectors, and under each subsector there are several producing units. So you have to find out and classify them. After that, you have to find out the value addition in each sector, and you can add all the value addition in every sector. You will get gross value added at market price, and when you add up, when you take summation of gross value added at market price by each sector, you will get GDP MP, or gross domestic product at market price. So after that, you need to find out net domestic product at factor cost. So to calculate net domestic product from GDP MP, you need to deduct depreciation. To get net value, you must deduct depreciation. So from GDP MP, deducted depreciation, and to get the factor cost value from market price, you need to deduct net indirect taxes. So this way you will get NDP FC. So this is the domestic value addition. Now you need to add up net factor income from abroad. How much of money value addition came in and how much of money has gone out. So difference of that, you will get net factor income from abroad. And when you add up NFIA to NDPFC, you will get NNPFC, that is net national product at factor cost, and NNPFC is nothing but national income. So these are the simple steps to calculate national income with the help of value added method. Now some precautions while calculating intermediate consumption. Imports are not separately included unless and until it is explicitly given. If it is not explicitly given, it should not be added. So you can take example here. You can see intermediate consumption 1700 crores and imports 1500. So here it is not explicitly given, so intermediate consumption will be equal to 1700 only. You need not to add this value, right, because it is not separately given. You can see in this example, purchase of raw material from domestic firms. Domestic firm, it is equal to 800 crores and imports 200 crore. So it is here explicitly given material from domestic firm 800 crore, imports 200 crore. So intermediate consumption, you need to add up these two. It is equal to 1000 crores. So this is how you calculate intermediate consumption. There are other methods also to calculate value of output. When the entire output is sold in an accounting year, the value of output will be equal to sales. But if there is some unsold stock available, in that case you have to calculate with the help of this formula. Value of output will be equal to sales, whatever sales took place, plus change in stock, and this change in stock can be calculated with this formula: closing stock minus opening stock. So this is how we calculate value of output. Now the calculation of value of output with the second method. The second method is simple: quantity multiplied by price. Say for example, a firm is there which is making tablets, and it is producing 1000 tabs and selling at the rate of 5000 per piece. So value of output will be 1000 multiplied by 5000, so it will be equal to 50 lakh. So this is how also you can calculate value of output. Then treatment of exports. Exports are not separately included unless and until it is given so. So here also you can take the first case: sales 10,000 crore, exports 2,000 crore. So here value of output will be equal to 10,000 crore only, because export is already there and it is not explicitly given. In the second example, you can see domestic sales equal to 7,000 crore and exports 3,000 crore. So here explicitly given domestic sales and exports. So you need to add up these two to get the value of output. So these are some of the precautions while calculating intermediate consumption. Now precautions related to overall value added method while calculating national income with the help of value added method. So first precaution is about intermediate goods. Intermediate goods value must be deducted from the value of output to arrive at the total value. Otherwise, or value of output, there you will commit the mistake of double counting. Secondly, the second precaution, you must not include sale and purchase of second-hand goods, because it is already added while it was produced. So you must deduct the value of sale and purchase of second-hand goods. But the commission and brokerage of these transaction should be included. This is the second precaution. Third one is production of services for self-consumption should not be included, because it is very difficult to measure and estimate. For example, services of housewives should not be included, or a person taking care of the family, that value is not included. So these services which are not marketed, non-market transaction services should not be included. But the same services for the market, or for the when it comes to the market and for which people are paid for it, it is included, like service of maids, drivers, private tutors should be included because you are paid for it. Same if a tutor teaches his or her child at home, that should not be included, because, and in the same way maids working in her house, the value of that service will not be included. Fourth one is production of goods for self-consumption must be included while calculating national income, because you need to find or estimate the value of the non-market goods which are produced for self-consumption. Millions of farmers are there in the economy who are producing food grains for themselves. They do not take it to the market, they don't sell it, they don't have enough surplus to sell it. So that estimation must be done and should be included in the national income. The next precaution is imputed value of owner-occupied houses or owner-occupied shop. So you need to calculate the imputed value of those owned house. You are not paying any rent, but if you don't own a house, you need to pay it. So that value must be calculated and added in the national income. So, and lastly, the last precaution is change in stock of goods or inventory should be included. The net increase in the stock of inventories will be included in the national income as it is part of capital formation. So while calculating value added method, you must take care of these 6 precautions. So this is how we calculate national income with the help of value added method. So thank you so much. Don't forget to give your comments and feedback.